Hello friends, we are going to discuss that over-leveraged borrowers and over-lent lenders are being forced to boost up economic growth. Government is forcing over-leveraged borrowers to borrow and over-lent lenders to lend to boost up growth. But over-leveraged borrowers are reluctant, seeing the market riskier situation, while over-lent lenders are also reluctant, seeing the market situation as well as rising danger of higher NPAs or non-performing loans. Even in this situation, RBI has also cautioned. Here in this situation, government is forcing and telling the banks that it is their core lending business to lend borrowers with vigor or renewed vigor. But reluctant lenders are thinking it would not be better to lend. But forced lending by government through persuasion of banks to do their core lending business and by going out at the doorstep of borrowers or over-leveraged borrowers to support lending and borrowing business. In the midst of lost ability of shadow lenders, in the midst of downgraded India's sovereign credit ratings and downgraded credit ratings of corporates, big business houses, big manufacturing houses, SMEs, and even individual borrowers who have a lesser and lower credit worthiness. Here, RBI has cautioned financial institutions that NPA is going to rise above to 13% at the end of 2020. But actually it will rise more than this and it may go beyond to 15% in this period. Here, Finance Minister says that banks are catalyst in economic recovery and economic growth. By saying so, Finance Minister is hiding behind over-lent lenders banks, while government has already hidden behind RBI. But all we know that physical policy makers or government takes a lead role in economic recovery and economic growth. But here we see a peculiar situation where both RBI or behind RBI, both government as well as finance minister are hiding behind the RBI and banks. This is a peculiar situation. Instead of leading front to boost up economic growth, both are hiding behind financial institutions. Here we see that in this situation, forced lending is not good. Forced lending in this situation will bring financial crisis. So government should not force for forced lending as well as forced borrowing. Forced borrowing and forced lending in a sense of market riskier and higher and bigger rate is, or in presence of these situations, it is not good for forced lending and forced saving. Here, for the time being, to provide easier method for loan borrowing and loan lending may seem good. Even moratorium on loan may seem good. But after restructuring of loan, it is borrower who will have to pay the total borrowed amount with other interest rates to the lender within 2 years. This is a situation of forced lending, which seems it is good and easier, but ultimately borrower and lenders both have to pay out of these situations. Here, borrowers become unable to generate sufficient amount for repayment of loans to the lender, and finally borrowers have to perish. Such type of myopic adjustment of RBI and financial institutions and banks are not good. It brings a financial crisis. It is right that economic recovery and economic growth is essential, but it is not so easy as government is thinking. It takes time. Lending and borrowing may be or may seem easier, but finally loan repayment matters here, and here loan payment is measured on the scale of required rate of return, net present value, and internal rate of return. On this scale, if required rate of return is higher and greater than NPV, net present value, and internal rate of return, then loan repayment is viable. On the other hand, if required rate of return is lower to the NPV, net present value, and IRR, internal rate of return, then loan repayment is not viable. So, lending may be easier, but repayment is more harsher, and it takes time, and it also brings harsh and painful situation for borrowers as well as lenders. So forced lending in this situation where lenders have lost their confidence, borrowers have lost their confidence, purchasing power has been lost, and market situation is riskier, where required rate of return is also lower to the IRR, internal rate of return, and net NPV, net present value. So here it is clear that forced lending and forced borrowing is not going to pay a better result for the boost of economic growth. So economic revival is good, but it certainly takes time. Government is in a hurry, but it can't pay. So in this situation, we see that over-leveraged borrowers and over-lent lenders have virtually or going virtually to fail under the forced lending and forced borrowing of government and finance minister. This is the situation, and in this situation, forced lending and forced borrowing is not boosting economic growth. And finally, it brings a financial sector destabilization and as well as lowering economic growth with higher NPAs. So this is not judicious and prudential decision. Government should not force our over-lent lenders and over-leveraged borrowers in lieu of boosting economic growth within the shortest period. Because economic growth and economic recovery takes time, government should understand it. This is my analysis. A lot of thanks to my viewers, economists and financial institutions.